Welcome back to Finance Homefront. Today, we're diving into the exciting world of Ethereum and the upcoming spot Ether ETFs. Before we get started, I want to thank you all for watching and supporting the channel. If you enjoy our content, please give this video a thumbs up. And don't forget to subscribe for more updates on the latest in finance and cryptocurrency. Remember, this video is for informational purposes only and does not constitute financial advice. Let's get into it. Following the triumphant introduction of multiple spot Bitcoin exchange traded funds in the United States in January, cryptocurrency investors have shifted their focus to Ethereum. On May 23rd, Ethereum received a rapid last-minute approval for spot Ether ETFs. This approval was contingent on asset managers completing all necessary follow-up documentation. With the majority meeting this requirement, industry analysts now foresee the first spot Ether ETFs commencing trading prior to July 4th. The excitement surrounding the launch of ETFs for another major cryptocurrency on U.S. markets is palpable. Nonetheless, numerous analysts have endeavored to moderate expectations regarding their performance, cautioning that the demand might not match the enthusiasm seen for Bitcoin. Despite this, a Thursday report from Steno Research posits the market's outlook on the upcoming Ethereum spot ETFs is overly pessimistic. The firm projects a net inflow of $15 to $20 billion within the first year, asserting that Ethereum possesses attributes appealing to Wall Street. In comparison, Galaxy Research estimates a $5 billion net inflow into spot Ether ETFs within the first 5 months. Similarly, Bitwise Asset Manager predicts a $15 billion net inflow within the first 18 months. According to Steno Research analyst Mads Eberhardt, there is speculation that the ETFs could launch as early as next week, potentially on Tuesday, July 2nd. This follows several amended S1 filings submitted by issuers in recent weeks, which have received minimal comments from the SEC. The expectation is that the ETFs will go live the day after the SEC approves these S1 filings. The crypto community is abuzz with debate about whether the Ethereum ETFs will replicate the success of the recently launched US-based Bitcoin ETFs. Many experts remain skeptical. Notably, Bloomberg ETF analysts Eric Balunas and James Seifert have predicted that the Ethereum ETFs will capture only 10 to 20% of the inflow seen by Bitcoin ETFs. Considering the Bitcoin spot inflows totaled approximately $14.439 billion over 6 months, a 10 to 20% share would translate to around $1.5 to $3 billion for the Ethereum spot ETFs within the same period. Eberhardt noted that this would be considered unsuccessful when compared to the highly successful Bitcoin ETFs. The report emphasized that due to Ether's lower market capitalization and liquidity compared to Bitcoin, even a smaller inflow into ETH ETFs would significantly impact its value. Eberhardt remarked that Ether's future price performance is now closely linked to the performance of spot ETH ETFs. He suggested that strong ETF performance would create direct buying pressure and stimulate indirect buying, encouraging other market participants to acquire Ether if the ETFs demonstrate substantial net inflow. Despite the general market pessimism surrounding Ethereum spot ETFs, Steno Research remains optimistic. They continue to forecast a net inflow between $15 and $20 billion in the first 12 months, even accounting for outflows from the Grayscale Ethereum Trust. This is compared to their expected net inflow of $30 to $40 billion for Bitcoin spot ETFs in their first year. Eberhardt predicted that given this strong anticipated Ethereum inflow and other factors, Ethereum could reach at least $6,500 by the end of the year. If their assessment of a strong Ethereum ETF inflow proves accurate, the ETH-BTC ratio should increase significantly. Steno Research maintains their prediction that the ETH-BTC ratio will hit 0.065 later this year. Offering a contrasting viewpoint, Andrew Kang, a founder and partner at Mechanism Capital, anticipates that Ether ETFs will attract 15% of what Bitcoin ETFs did. He expects the price of Ether to trade between $3,000 and $3,000 before the ETFs launch, with a potential slide to the $2,400 to $3,000 range post-launch. Kang explained that the approval was unexpected, leaving issuers less time to pitch large holders to convert their ETH to ETF form. Additionally, he noted that holders might be less inclined to convert due to the need to forego yield from staking, farming, or using ETH as collateral in decentralized finance. Kang suggested that a potential catalyst for changing this outlook could be Bitcoin reaching $100,000 in late Q4 or Q1 2025, which could pull Ether along to new all-time highs, albeit with a lower ETH-BTC ratio. He also mentioned that while there are long-term developments to be hopeful about, such as BlackRock and Larry Fink's efforts to establish financial infrastructure on blockchains and tokenize more assets, the timeline and impact on ETH remain uncertain. Kang expects a continued downtrend for the ETH-BTC ratio over the next year, ranging between 0.035 and 0.06. He observed that ETH-BTC has been making lower highs each cycle, so this trend should not come as a surprise. According to MN Trading founder Michael van de Poppe, the launch of an Ethereum ETF is the most underhyped and undervalued event of the year, but probably the most significant one. Poppe drew parallels to the anticipation surrounding the Bitcoin ETF, noting that after Grayscale's victory against the government, the process accelerated significantly, leading to the ETF approval and live trading. In contrast, the Ethereum ETF has seen zero expectations and zero hype, with some investors expecting Ethereum's price to potentially drop to around $2,000. Poppe acknowledged that while inflows into spot Ether ETFs might be significantly less than those seen with Bitcoin ETFs, the impact on Ethereum could be more pronounced in percentage terms. This is due to Ethereum's lower stock-to-flow ratio compared to Bitcoin, driven by the substantial amount of staked Ether and Ethereum's deflationary mechanisms. He emphasized that Ethereum serves as a compliant settlement layer and the foundation of the Web 3.0 ecosystem. Poppe observed that the markets entered the recent approval with a highly negative sentiment, marking a low in the Ethereum and Bitcoin pair, which has since increased by more than 20%. He stated that the bull market has already begun and could accelerate further if Ethereum breaks through the 0.06 BTC area. This breakthrough could lead to a significant influx into the entire Ethereum ecosystem, positively affecting projects like Arbitrum and Optimism. Looking beyond cryptocurrency-specific developments, Poppe highlighted that both Bitcoin and Ether are expected to trend higher and attract more investor attention in the second half of 2024 due to the declining U.S. economy. He pointed out that more negative economic data is emerging, supporting the case for a reversal in crypto markets. As a result, he anticipates a significant influx into Bitcoin, Ethereum, and the broader crypto ecosystem. Thanks for tuning in to Finance Homefront. If you found this video informative, please give it a thumbs up and share it with others who might be interested. Don't forget to subscribe and hit the bell icon so you never miss an update. Let me know your thoughts on the upcoming Ether ETFs in the comments below. Remember, this is not financial advice. Always do your own research before making any investment decisions. Until next time, stay informed and stay invested.